If you buy equipment for your business, the standard rules require you to spread the tax deduction over 5 to 7 years. But right now, you no longer have to wait. You can deduct the entire cost in the exact same year you purchase it. To execute this correctly, we need to accomplish 3 specific things. We are going to calculate your exact tax deduction, verify that your specific equipment is eligible, and map the deduction directly to the correct IRS forms. The legal authority for this strategy comes from the One Big Beautiful Bill, which permanently restored 100% bonus depreciation. The IRS confirmed the exact mechanics of this restoration in Notice 2026-11. This eligibility chart shows what qualifies. The IRS rule is simple. Property must have a standard depreciable life of 20 years or less. This includes business computers, manufacturing machinery, commercial vehicles, and interior building improvements. Equally important is what does not qualify. You cannot use this deduction for the physical building itself, the land it sits on, property you already owned and converted to business use, or equipment used mostly for personal reasons. Passing this eligibility test and correctly classifying your assets guarantees you are ready to claim massive tax savings in year 1. Let's run a calculation using a real business. MACRS owns an auto detailing shop and is buying an $80,000 commercial pressure washing system. MACRS operates a profitable LLC and falls into the 22% federal tax bracket. Bonus depreciation has no maximum income limit, but his 22% bracket will determine the exact dollar amount he saves. This chart shows the 7-year schedule. The IRS forces MACRS to spread his $80,000 deduction. In year 1, he deducts $11,400, saving only $2,515. With 100% bonus depreciation, MACRS deducts the entire $80,000 immediately. At 22%, that generates $17,600 in federal tax savings. That creates an extra $15,085 in cash flow today compared to the old rules. Effectively, MACRS secures a 19% discount on his equipment, fully funded by his immediate tax savings. To actually capture that cash flow, you must report the deduction accurately on the correct sequence of tax documents. Step 1 is IRS Form 4562. You will enter your equipment purchase in Part 2, specifically on line 14, labeled Special Depreciation Allowance. Form 4562 is the calculation sheet. That total flows to your profit and loss statement. For an LLC, the deduction transfers to Schedule C, line 13. Finally, your reduced business income transfers to Schedule 1 of Form 1040, shrinking your adjusted gross income. This exact sequence is mandatory. If you attempt to claim the deduction directly on Schedule C without filing Form 4562, the IRS will reject the deduction and likely trigger an audit. Executing this perfectly requires avoiding 3 specific traps. The first is the date of your purchase contract. If you signed a binding written contract on or before January 19, 2025, you're locked into the old rules and get only a 40% deduction. Contracts signed January 20 or later qualify for the full 100%. The second trap you must avoid is state conformity. States like California do not follow the federal bonus depreciation rules. Claiming a massive federal deduction could leave you owing significantly more on your state return. The final trap is forcing a loss. Deducting the full cost might drop your business income below zero. To preserve deductions for future profitable years, the IRS allows you to elect a lower 40% rate or opt out entirely. Maximizing this strategy requires careful coordination between your purchase timing and your state-level tax planning. Before you file, verify that your asset has a 20-year or less depreciable life. Confirm your contract was signed on or after January 20th, and ensure the full deduction is entered on Form 4562. Bonus depreciation is powerful, but it works completely differently than the Section 179 deduction, which has a hard dollar limit. Subscribe to the channel because our next video covers exactly how to combine Section 179 and bonus depreciation for maximum effect. As always, before making any purchasing or tax decisions.